Attention all real estate investors or people that want to know what actually infinite banking or be your own banker actually means. Today's episode is going to be a quick overview of what infinite banking is. How we doing, guys? Johnny Mason to Plays Jonathan Mason. I'm going to go over today what infinite banking is. You've probably heard the term before on social media. All these experts talking about use whole life, can't use IUL, or use IUL, don't use whole life, whatever it is. First, you have to have an understanding of what infinite banking or BYOB, not bring your own beer, not be your own boss, but be your own bank actually means. That's why BYOB, be your own bank, infinite banking. Here's the basics. Here's a question for you. You can have your money sit in a bank account earning what? 0 point whatever. Or your money can sit in a bank account earning 4, 5, 6, 7+%. Which would you prefer? Okay. What if your money could sit in a bank account, earn 4, 5, 6+%, but it's all tax free and you can take the money in and out whatever you want? You prefer that option. Okay, so the way you do that is you have to use a type of permanent life insurance. I know there's Dave Ramsey and other people say buy term and all this other stuff. I totally understand that part. I'm talking about learning how to use cash value life insurance policies as a bank for an investment tool, a savings tool, or some type of plan in your portfolio. Here's why. You have your bank. What do banks do? They take your money, then they loan it out for higher interest rates, and they keep the spread. Well, why don't you act as the bank? Difference is, over here, if you are the bank, you put your money in, you're buying life insurance, a permanent type of life insurance, and then there's a cash value side that's either indexed, it can be variable, it can be fixed, and that money is going to keep growing or compound interest, but you can take it out tax-free at any time, for any reason, not just for school or whatever you want. A lot of real estate investors, hear me out, a lot of real estate investors love taking large lump sums into these plans so they can take money in and out to while their money's sitting or while their money's parked, it's earning interest, and they can put it in different avenues. So let's just say, hey, I want to buy a development. I got 100,000, but I want to take 50 of it, put it here, and just invest the other 50. You can do that. So people like permanent life insurance for that kind of concept. So infinite banking is just a permanent life insurance policy where there's a permanent benefit and a cash value that you can take money in and out. Now here's another part of the debate. What type of plan do we use? Well, you can use whole life. Okay, great. It's very popular. There's guarantees involved. The cash is easy to access, but you're not getting the highest rate of return. And when you pass, whatever cash is there, it is going to go back to the insurance company. Keep that part in mind. Then there's IULs and other index options. Well, people don't like universal policies because there's something called the surrender charge, which gives you limited access to the cash. And if it's not fixed or guaranteed, it's kind of hard to predict the future. However, there are ways, most agents don't know this, you can actually eliminate surrender charges from day one using index products, IULs, not just whole life. So the way that we used to do this back in the 70s doesn't have to be the same way in the 2020 plus range. So now you can actually get an IUL or whole life or even a universal policy. You have to design it properly. The caveat to this is $200 a month is not infinite banking. $300 a month is not infinite banking. You're talking larger lump sums. So this is designed for the affluent. So the challenge that a lot of agents are pushing out there, and these are the problems. Hey, come be your own bank, $50 a month. No. $100 a month. You got to fund these things. So everything about this type of plan is designing the perfect bank for yourself. Use properly, it's going to be a 4, 5, 6+%. The cash is asset protected, so if I sued you, can't touch the money. It's all tax-free. We take it as a way to withdraw, take a loan, etc. When you actually are paying yourself back because you are the bank, but more importantly, it compounds interest. So it's rather going to sit in your bank savings or your insurance savings. Well, with that being said, hopefully this gave you a better idea about how infinite banking works. If you actually have a comment or want a part 2 in detail, please comment below, and I'm looking forward to the next episode. Take care.